It's options expiry, and we've got a lot of movement in very few stocks. Let's take a look at the triple witching today on the Weekend Update. Okay, friends, let's take a look at options expiry. And don't let all that jargon in the intro confuse you or scare you. It's really simple what's going on. So first up, let's take a look at the market. This is the market the way we've always been looking at it. Red line here is the S&P 500. Gold line is the 50-day moving average. Purple line here is the 200-day moving average. And what do you notice? Still all at all-time highs. Strong bullish trend. Market's going up. Everything looks great. Got nothing bad to say about anything that's going on in the market right now. So then why is there so much volatility in the chip space, in the Eli Lillys and Novo Nordisks of the world with their Ozempic? A lot of the really high-flying stocks have been getting hit pretty hard in the last couple of sessions. And the reason for that is we have the quarterly options expiry happening today. And so what this means is an option is just a way of renting a stock that you don't own. It allows you to take a leveraged bet, borrowing money, sort of like renting upside or protecting from downside in a stock. And there's a time increment to an option. So you only get a short amount of time where you want a stock to move up or down a tremendous amount. And if it all works out, you'll make a whole bunch of money. Now, this is a weird thing to be talking about. You might be saying, I've been investing for a long time. I really haven't ever considered what happens with options or how that market works. And this is one of those post-pandemic things, right? Post-pandemic, there's been an explosion in options activity. There's been an explosion in options trading. It's become, by volume, I believe, much bigger than the overall market. And so what is happening, because the options market is growing so big, we can now start to feel its effects inside the regular market. So here's the numbers. There is $5.1 trillion of options that are expiring today. And what that means is that shares are going to be moving, shares have to change hands, there's going to be, mark-to-market gains or losses. There's just a whole bunch of stuff that's flowing through the tubes behind the scenes in the market. And what that means is things like the market can move a whole bunch, and over here, single stock options, which has been by far the largest increase post-pandemic that we have seen, has been sort of like meme traders, retail traders buying call options on stocks that they like. This has been the largest area of growth, and single stock options, at least for this expiry, is almost entirely dominated by NVIDIA call options. So what that means is retail traders, little fish, have been betting very aggressively on increases in NVIDIA's share price. And so one of the things that's going to happen is as these options expire, some of those bets are going to work, some of those bets aren't going to work. But one of the reasons why NVIDIA dropped, I think it was 3 or 4% yesterday, and I think it's following up with another 3 or 4% drop today, is related to the piping that's happening behind the scenes, the plumbing of the market. So really weird technical stuff. This is not stuff that you need to concern yourself with. It's not stuff that you need to think about. If you're in the options market, then you know what's happening. If you're not, you can safely discard it. And this is one of those things. So what I've done here, this is the S&P 500. And what I've done is I've indicated options expiries across the chart. And what you notice here is options expiry really doesn't do anything, right? There's some thought that, it might change directions in the market. We might, it might cause all this sort of stuff. I don't think so. To my eyes, I don't see options expiry as really doing anything to the direction of the market or causing you to need to do anything with your investments. So today is one of those days where the gamblers are in control of the market, and so we just have to hold on through it. And one of the things why I think this quarterly options expiry is going to hit a little harder than most, and why we're able to feel it so much more, is because we're in the dog days of summer. So because trading volumes are low, when $5 trillion of options need to come through the tubes, we're going to feel it. We're going to hear the pipes creaking a little bit. So that's what's going on. The market looks good. I got nothing bad to say about that. There's wild action in some of the hottest stocks. That's okay. They need to cool off anyway. So we'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, Click subscribe. You'll be the first to know as soon as we upload anything. Appreciate it. See you soon.